AB. Yeah. I'll go ahead and.
Hey, Kevin, man. Nice to meet you. I've met you before. I think so. Yeah, you look familiar.
Yeah. Okay.
Sure facts. You stay out this way.
All right, everybody. We want to go ahead and get started. Know we're about 10, 11 minutes in, so we appreciate your patience. Um, Thank you for coming. This is definitely a good thing. You're taking your first step towards home ownership, so we really appreciate you guys being here. I would like to introduce myself. My name is Marcus Whiteside. I'm a realtor with Baird and Warner. Just a little bit about me. I come from a mortgage world, so 20 plus years in mortgage lending, underwriting, and real estate. So I kind of bring a little bit of both sides of the table to my clients' experience, which is very helpful because it's good for buyers to know the ins and outs of the process beforehand. So it's kind of my job to educate throughout the process. I'm very hands-on with my clients to kind of get them through that process because a lot of the mortgage lingo, a lot of people really don't understand. So it's kind of my job to kind of help with that. A couple more things about me: certified buyer specialist. I'm also certified listing agent as well, licensed in both Illinois and Indiana. I do a lot of work with first-time buyers, as well as investors, some new construction projects as well. And I do want to have my co-host introduce himself as well.
Hello, everybody. My name is Kevin Scott. I'm with Key Mortgage. Key Mortgage is partners with Baird and Warner on a lot of projects. We're their go-to mortgage company. I've been doing mortgages now for about going on 10 years. Prior to that, I was in the insurance industry. I'm like Marcus. I'm pretty much heavy on the education piece. The last thing I want you to do is walk away from this transaction after you get your keys and you really feel like you don't know what you just did. And so me and Marcus, we're both big on education throughout the process and after the process. So a lot of things that you will learn today and that you'll learn throughout the process of buying your own home doesn't stop. So we're still there for you even after you get your keys.
All right. And on top of ourselves, I want to kind of recognize a couple other people in the room. Jim Sahajas is my managing broker from my office is here supporting. And then we also have Anthony Burden, who is a village representative who want to introduce himself as well.
Good afternoon, and thank you all for coming out. As the Village of Madison, Marcus called me and told me he was looking to do a homebuyer seminar. As a village, we love that. And so I told him immediately we would host it. Now, I'm not trying to persuade anybody to move to the Village of Madison. Not my job today. My job today is to make sure that we are looking at home ownership for the region. In our region, home ownership is becoming more and more important. We want to see people buying and owning homes, not renting homes. Have an opportunity, if you have to rent it first and eventually become a homeowner, we want to see that become the situation for all of our people in our community. So we are excited.
You can start out with the first question.
Marcus, that we will host this every single time.
If you can start off with the first.
We don't grow as a community unless people own homes. So welcome and take advantage of this opportunity. Again, I'm not trying to sell you to Madison, but Madison is a great community. We have an 80% home ownership in Madison. We want to keep it that way. So we welcome you to look at Madison, but also to the region. So thank you, Marcus, for hosting.
Thanks for being here.
We want to, before we've got started, but right quick, I want to do like around a few trivia questions.
Just to kind of see what kind of where your guys' knowledge is as far as what you know in the process. And we got a couple gift cards we'll be giving out. So just a couple of little trivia questions just to kind of see what you guys may know.
Okay. Of the 3 steps following, which one do you do first in the home buying process? A, consult your agent. B, focus on your home search. C, get pre-approved. Ladies first. You can.
All right. Good job.
Is that right?
Yep. Absolutely.
It was a tie, so it was y'all both did it at the same time. Tie go to the left. But I feel you don't get the next one.
I got a true or false question. Inspections and appraisals are one and the same. True or false? I think I heard this gentleman first. They are not the same. Home inspections are more geared towards the condition of the home inspection, and we'll touch on all of these today. But home inspections are more for you to give you an idea of what exactly you're purchasing before you're really into your contract. The appraisal is more so geared towards the valuation of the property, geared what the value of the house is. So inspection is more condition, appraisal is more value. Now, there is a component of the appraisal that involves condition, but the purpose of the appraisal is to gauge the value. Okay?
Okay. What does PMI stand for in the context of mortgage?
Elaine?
Oh,
That's a tough one.
sorry? No, ma'am. So
Anybody else?
Okay, so let's do this. I'm gonna give you 3 more. Well, that was one of the things. You close. So you got property maintenance insurance, private mortgage insurance, or property management incentive.
Anybody?
Oh, going once. No. We got 2. So private mortgage insurance or hey,
All
private
right.
mortgage. So now private mortgage insurance,
There you go.
it does nothing for you as a buyer. That's pretty much whenever you're putting down on a conventional loan, which is, we'll talk about the different types of loans, but whenever you're putting down less than 20%, you're always going to be required by the lender to have mortgage insurance, private mortgage insurance, which is basically to protect the lender if you were to default on the loan. So that's the purpose of it. And then it does fall off after a certain period of time, but we'll go into that. Last one we have. When is your earnest money due? A, after closing. B, after your offer is accepted. C, after the appraisal.
Pretty good. All right.
All right. So Marcus is going to go ahead on and get started.
We got a couple people coming in. So when it comes to buying a home, there's a timeline that you follow. Okay. And it's important that you know every step of this process. Okay. So we've already kind of covered the first step, and the first step that's involved in the process is to get pre-approved. Pre-approval process is very important. It's very important because this lets you know what you can afford, what type of budget you're working with, and things of that nature. The pre-approval is typically going to let you know the most that you can qualify for, but it's also important that you as the buyer know your own budget personally and make sure that you keep things at a comfortable level for yourself. So pre-approvals are good because again, it gauges exactly where you start and where you search price wise. But it also helps you understand as a result what type of payments you'll be looking at. So the first thing is the pre-approval, then you'll consult with your agent, and then you'll focus on your home search. So we'll kind of dive in to these 3 steps of the process. So the first step, I'm sorry, go ahead. Your home search. Yeah. So again, getting pre-approved is an important part of that process, and I'm going to let Kevin take care of this part because he handles all the mortgage sides. So I'll let him step in and cover this portion.
Getting pre-approved. Has anyone ever went through the pre-approval process before, by chance? Okay.
Before does anybody object picture. I will not take it if somebody objects.
How was your experience? Confusing? Okay. Okay. Yeah. So going through the pre-approval process, sometimes it can be stressful. It can be intimidating, but our job is to make sure that we kind of like take the stress out of that to make sure that your questions are always answered to a level to where you feel like you understand. Because if you don't understand, then no matter how many times I explain it, you got to explain till you understand. So we're going to go over the top 20 questions that people typically have either before the pre-approval process or during it. What is a mortgage? So basically, a mortgage is an agreement between you and the lender. The lender is giving you the money to be able to buy the home. So yes, you have to have some skin in the game, which is your down payment, regardless of whether or not you're getting down payment assistance or not. That still is skin in the game. Okay, so the balance of that is what's going to be your principal and interest. Okay, that's going to be your mortgage payment. Okay, and so that, in the simplest terms, is what a mortgage is. Okay, financing options. It's a lot to choose from. So we typically you have VA. We got any veterans in the house? What branch? Cool, same here. Okay, so we got VA loans for veterans, FHA, USDA, FHA, and VA are all three government loans. Okay, conventional. Well, first-time homebuyer is not really it's not really like a financing product, but you do get certain perks for being a first-time homebuyer when it comes to like down payment assistance programs and such. New construction, there's different types of programs out there for new construction. And so those are now USDA loans. You're not going to see a lot of USDA loans out in this particular area. Maybe if you go, because it's more like for rural areas. So like if you go out to Beecher, Peatone, really out south, or if you get some far west, you might find some rural areas like that. Let's see here. What steps do I need to take to secure a loan? Okay, so a lot of times when I'm talking to somebody about the pre-approval process, or they say, Kev, I'll talk to you when I get right. When I get my stuff together, that's when I'll come to talk to you about getting pre-approved. That's the wrong answer. You really want to start the pre-approval first because you want to make sure that if there are things that you need to work on, you know what those things are, because you might be self-diagnosing yourself. And how many times you go on Google to try to Google your symptoms when you got like an elbow pain, you try to see if you got tennis elbow, you try to see all those things. People do the same thing with mortgages. And so you want to talk to someone like myself to be able to make sure that you're going through the right steps. Some of the things that you're going to need, if you are a W-2 employee, meaning like you work for somebody, your W-2s, the paycheck stubs, tax returns. If you're self-employed, you definitely need your tax returns. Any self-employed people in the audience today? Self-employed? Okay. Self-employed is self-employed income, even though we don't have any, it's just it's a different breed. And so self-employed people really need to talk to someone first before they decide to go try to get pre-approved. Now, when it says other documents as requested, getting the pre-approved can be simple. I like to make it, if it's going to be complex, let it be complex because of the individual scenario. Like, your scenario might be, I may only need 2 paycheck stubs, W-2s, bank statements, driver, that's it. For you, I might need, well, definitely, if you're doing a VA loan, I'm gonna need a certificate of eligibility. You might have just sold a house. I'm gonna need a closing disclosure from the sale of the old house. You might got this going on, that going on. So you got all these deposits. I gotta, so his situation might be complex. So I might need more documents. So it all depends. A pre-qualification and a pre-approval, they are very different. Like right now, I can issue you a pre-approval right now. Just be like, how much money you make? You like, I guess this, whatever. How much money you got in the bank? I guess that. The credit good, pretty good. Fine. Here go a pre-approval for $300,000. Now, Marcus ain't gonna go. When he see pre-qualification on there, he's gonna call me and be like, "So, did you pull his credit? Did you get his bank statements? Mark, you ain't showing you no houses." So, pre-approval, that's where I've done my due diligence. I've validated everything you tell me. It's not. I'm never gonna call you a liar. I just need to validate it because sometimes what you may think about your income might be a little bit off. What you may be telling me about money that you expect to have because you're banking on your taxes or you're banking on certain things. A pre-approval is basically me telling you you are ready to rock and roll now. It's not a pre-approval with an asterisk as far as like based upon this, based upon that. Okay? Credit score and how do lenders use them? So I know a lot of people probably use, Credit Karma, Credit Journey, and things like that, which are good credit monitoring tools. But for the most part, if you ever read the fine print, the scoring module that they use is different than what lenders use as far as like when we pull your credit. So FHA has FHA, the lowest credit score that you can use for FHA and use the minimum down payment is 580. Okay. For a conventional loan, the minimum down payment is 3% if we're using a first-time home buyer product, or if not, it would be 5%. So, a lot of people think that you do have to come up to the table with 20% down. If you got 20% down and everything like that, and that fits your scenario, that's fine. But there are times where I might encourage you to maybe not put 20% down. Depends upon your total financial picture. You might need to, have an emergency fund. If we put all your money down, we may not want to do that. But the credit score, that's what we're going to use to kind of gauge, one, what product can we use, and what kind of down payment assistance will be available for you. So your credit score does play a factor even with down payment assistance program. It's not a gimme just because you may be a first-time home buyer. If any of you want to find out what your credit report, what's on your credit report, make sure it's all correct and everything like that. If you do want to do that prior to having it pulled, you can go to annualcreditreport.com. You can do this once a year with all three bureaus, Equifax, Experian, and TransUnion, and you'll be able to see what's on there. If there's anything that you disagree with, you can contact them directly, and you can do what's called a dispute. When you do a dispute, it typically takes around 30 days for the creditor to respond, and if they don't validate that it's a valid debt, then they have to take it off. How do you choose the best loan program for me? So I like simplicity, okay? So when I'm looking at your credit score, when I'm looking at your income, when I'm looking at how long do you plan on living in, I'm going to be asking you a lot of questions where you pretty much going to think I'm nosy. You probably, if I'm talking to you on the phone, you're going to be looking at your husband or your wife or whatever, like, this brother's nosy. I am nosy. I am very nosy, but I'm nosy with a purpose. So if I'm asking you certain questions, it's to make sure that I'm providing you with the best loan product that's available for you. Because I just can't say FHA, if everybody in here had a credit score was 640, that doesn't necessarily mean that I'm going to put everybody in an FHA loan. Conventional might be the best fit. VA might be the best fit. So when somebody, you might be planning on moving out of state to a rural area where USDA might be your best loan. So there's certain questions that a loan officer will ask you and try to dive in, do what I call like a deep dive to make sure that we're putting together the best loan program product for you. And see, I pretty much covered the types of loans. So now that you've got your pre-approval, so we've pulled credit, we've validated your income. I did a home buyer, what I call like a home buyer pre-approval consultation. I've explained to you, where did these numbers come from? Why am I only pre-approving you for this versus that? And you got all, I've answered all your questions. Then I'm going to email you and Marcus the pre-approval letter, the parameters, what's around this pre-approval, and then Marcus is going to take it from there and do another consultation with you as far as like what's next. That's when you're going to talk with Marcus.
All right. That is my turn. So now that you've talked to Kevin, you got your paper in your hand saying, hey, I can get a $500,000 house. Y'all ready? What you do now? Well, what you do is you come see me. And then what we're going to do is we're going to sit down and we're going to talk about it. So the first thing I want to talk to you about is agency. There's a term out there that's in the real estate market that's called agency. An agency is basically a relationship. It's a relationship between one person who's representing the interests of another. That's how agency is formed. And under Illinois law, once a licensee and a client have interest into this agency relationship, I owe you as a licensee certain duties as your agent to act in your best interest. Duties like confidentiality, loyalty, disclosure, obedience, accountability, skill, care. All these things you should get just for having an agency relationship with the licensee. So agency can be formed in two different ways. It can be formed in writing by way of what's called an exclusive marketing agreement if you're selling your house, or it can be formed by way of an exclusive buyer representation agreement if you're buying a house. These documents are very, very important because it outlines everything pertaining to your relationship with that agent. Okay. It also can be formed without it being written. If an agent performs certain acts, certain duties, it can be implied that that's your agent. Okay, anything outside of regular clerical work, information, um, anything clerical and informative in nature, anything outside of that, it can be implied that hey, you're my agent. So it can be formed in two different ways: in writing or implied. So it's very important when you're out of open houses, you're looking at houses, you don't have an agent there with you representing you. It's very important that you watch your conversations because you can easily find yourself in an implied agency situation. And now that person is representing you and you don't know that they represent you. So it's very important that, if you're going to go to open houses, that you have an agent that's going to coach you into what to say, what not to say, how to conduct yourself, what to do, what not to do. And because again, it's very important that, you watch what you say because again, you can find yourself in that situation. So it's very important that you are consulting with your agent before you go out. Okay, designated agent. So before 1995, Illinois used what's called sub-agency. And that's basically where the agent only represented the seller. The buyer had no representation whatsoever. Okay, so it's very disadvantageous. It wasn't advantageous to buyers because they were buying properties and had nobody to represent them, nobody to negotiate their terms, nobody to help them with what to offer, nobody to help them with how much to offer, any of these things. Agency only applied to the seller. So after 1995, or in 1995, they changed it and replaced sub-agency with what's called designated agency. And that basically what allowed brokerage companies like my company, Baird & Warner, to designate its licensees to represent either the buyer or the seller. So it's kind of become more of an even playing field, so to speak, because now that buyer can have equal representation just like that seller. So it's very important that you know the difference between the two as well. Okay, so when you get that pre-approval letter and it's time to talk to me and we'll sit down and we'll go over things, there's some things that we're going to talk about. First of all, we're going to talk about your pre-approval. We're going to talk about the terms of your approval, what you're approved for, the terms of it, what type of loan it is, your down payment, what you're expecting, things of that nature. We're going to go over this home buying process again, kind of what we're talking about today. We're going to go over your expectations from your agent, and then we're going to also go over the agent's expectations of you. Now, this, of course, is in the scenario as if you're working with me personally. Every agent is different, but these are the things that I personally like to discuss in that initial consultation. Okay, we're going to talk about commissions, and commissions is very important because I don't know if you're aware, but there's been a lot of things that have changed recently where commissions are at the forefront of the real estate process. In a nutshell, um, up until November, it was kind of a standard thing where sellers, when they sell their house, they pay their agent a certain commission, and out of that commission percentage, a certain amount of it goes to the buyer's agent. That's a perfect world, or a normal world, I should say, and that's the way it was for a very, very long time. But at some point, a group of sellers got together and they said, you know what? We feel as though our agents who helped us sell our house, they all basically conspired to make us pay for that buyer's agent's commission. So they felt as though they were forced to do it and weren't given an option. So as a result of that, this big lawsuit occurred. A lot of major companies got sued. And as of November 1st, it became official that sellers can actually have the option that they don't want any of the commission paid to their agent to go to that buyer's agent. So it's very important during this first consultation that, hey, what are we going to do in that scenario? You find a house, you're in love with it, but it says at the bottom, that seller isn't paying me. What do we do? So it's important that you have these conversations. Do you look at the house still, knowing that you're going to have to pay that out of your pocket now? Do you just say, I don't want to look at any of those houses because I don't have the money to pay it because I'm already struggling for a down payment? Or do we call and say, hey, can we talk to the seller and see if they're willing to budge and help us out a little bit? So that's important because that buyer representation agreement is going to outline all of that. And it's going to tell you what do you do in those scenarios. It's important that you have that agreement with your agent before you even go out there, because that way you know when you come across that scenario, what am I going to do? Okay? It's very important that you get that out up front. We're going to talk about your goals. We're going to talk about, my background, my credentials, if we just met. And then, of course, at the end of the day, we're going to have to agree to work together. So these are topics that we're going to discuss in that initial consultation. Now, again, every agent is different. I can only talk about myself. So when it comes to commissions and the buyer says, well, why should I pay you if that seller isn't paying? What are you doing for me to warrant me paying you out of my pocket? Well, this is a list of some of the things that can tell you what that buyer agent is supposed to do. Okay, they're gathering details about your criteria based on your goals. They're setting up automated property searches based on your criteria. They're having daily communication with other agents regarding possible property matches. They're your personal shopper who reports back to you about potential properties. So while you're out at work, ball games, family obligations, that agent, myself, is out there shopping on your behalf, looking at properties, reporting back to you, letting you know if this is a good fit, this is a good fit. Do you want to go see it? Let's set up a showing, things of that nature. They're coordinating property showings, they're conducting market analysis, and helping you submit an offer once you find the one that you like. They're negotiating the terms with the agent on the other side. They're assisting with facilitating the delivery of earnest money. They're coordinating home inspections, answering questions. They're negotiating terms with the agent based on those inspection results. They're assisting with completing the mortgage process. So Kevin and I are working directly together. They coordinate your walkthrough, to provide support to you at the closing. So that agent is doing a lot. You know what I mean? That would warrant, yeah, they should get paid for their time. You know what I'm saying? So if an agent, if there's ever a situation where you wonder why should I have to pay my agent because the seller isn't paying it, these are the reasons why. That buyer agent does a lot. You know what I mean? So it's important that you know these things throughout the process. Okay. So now you found the house, we've written the offer, we've negotiated it, your offer is accepted, and now it goes into what's called an attorney review period. So of course your initial earnest money is due at that time. And at this period, it's a very important part of the process because at this point is where you can actually have buyer remorse and you can walk out if you want. The attorney review period typically is 5 days. If the agent is using what's called your standard 7.0 real estate contract, in there it's going to have in there that after the offer is accepted, the buyer will have 5 days to have their attorney review the contract, for you to have your inspection done, and for you to go through everything regarding this house to determine whether or not you want to move forward. So it's not a situation where once your offer is accepted, you're locked in. You still got some time to go through your process, your due diligence, and see if this is really, really the house that you want. So it's important that you have not only a good loan officer, but also a good real estate attorney, because that real estate attorney is going to be negotiating all the things for you in terms of the contract and also in terms of the inspection results. Okay. So let's touch on home inspections a little bit. So you've got your offer accepted, you've delivered your earnest money. Now it's time to get your home inspection so that they can check out the house and make sure it's up to par. Some of the benefits of home inspections, because you'll be surprised, a lot of people say, I don't want to pay for a home inspection. I don't want to get one. Can we skip that process? I highly encourage you to have a home inspection, because this is where they're going to find some very, very important things about that house that you may not have known just looking. And the average buyer doesn't know about furnaces and hot water tanks and roofs and all those things. So it's very, very important that you get a home inspection. And these are some of the benefits. It's identifying potential safety risks. It's gaining leverage as a buyer, because if something happens, something's wrong with that house that the inspection finds, that's some leverage now. I want a credit for this thing now. Your furnace is old, your roof isn't that good, you got cracks in the foundation. All right, I'll still buy the house, but now we need to renegotiate some things, because now the value is dropped to a degree. Okay, so your agent and your attorney is going to help you with those negotiations. Okay, it's going to help you also plan for costs of repairs. So if there's repairs that needs to be done and you're ready to take on the brunt of those repairs and pay for it yourself, it kind of helps you plan for it. It gives you a peace of mind and also eliminates buyer remorse. So buyer inspections, home inspections are very important, because it saves you a lot in the long run. Certain things that the inspectors look for. They're looking at everything in the house from top to bottom, but some of the major things: foundation, roof, plumbing, electrical systems, HVAC systems. They're looking at everything. They're checking water pressures. They're looking at the flooring. They're looking at your crawl space. They're looking at every single thing, because again, this inspector works for you as the buyer. So they're going to point out everything that they see, whether it's minor or major. They're going to point it out and let you decide if these are things that I want to see if that seller can either fix, give me a credit for it, or something. Okay, so just keep that in mind, that inspector works for you. Okay, so the inspection reveals some problems. What's your options? Okay, let's say there's some cracks in the foundation, or let's say the hot water heater is not working properly, or things of that nature. You can do a couple things. You can ask the seller to make the repairs. You can ask the seller for a credit to offset those repairs. You can agree to just pay for it yourself. You can share the cost of repairs with the seller, meaning you'll pay a certain portion and they'll probably give you a credit at closing for their portion. Or you can just say, you know what, this is too much. The house is way worse than I thought. I don't want this house anymore. And you just walk away. As long as you're within that 5-day attorney review period, you're perfectly fine to do that. And keep in mind, that seller can do that too. That seller can say, this buyer is asking me for way too much. I don't want them to buy my house. That can happen also, and I've seen it happen. So just keep that in mind. Okay? So, yes. To a degree. To a degree, because you also got to remember, when I see as is, I kind of chuckle a little bit. The reason why I say that is because, yeah, it's as is, meaning you're not going to repair something. But if my buyer's financing requires you to pay it, fix it, meaning they're not going to get their loan unless you fix it, it ain't no more as is. You either fix it or you don't sell it. See what I'm saying? So as is only goes to a certain point. If it's health, safety related issues, typically that seller is going to have to fix them, or that house is going to sit there. And again, if it's an FHA buyer, they're going to look for certain things outside of a normal conventional appraiser will look for. So there could be times where, yeah, this thing has to be repaired in order for me to get my mortgage. So seller, what you going to do? And at that point, it can't be a credit. It's got to be fixed, or we can't close. I'm okay with going to see as is because the way I look at it is that's giving my buyer leverage. If it's as is, that means there's something wrong. Because if ain't nothing wrong with your house, what you selling it as is for? If ain't nothing wrong with your house, then you're gonna sell it the way it is, and you know that if there's something wrong, it's probably minor. You know what I mean? So if you don't let as is scare you away. I love as is because that's saying, all right, well, let's see what's wrong so we can ask for some money. You know what I mean? So don't run away from that. Any more questions? I know inspections is a lot of stuff, a lot of information. Anything else? Okay. So now that we have negotiated, you've had your inspection, you've gone through that process, we've negotiated all the results of the inspection. Now you have officially closed your attorney review process, meaning everything is done. The seller has agreed, you've agreed, now you're done. Now, once that attorney review period is closed, you're locked in, meaning that earnest money, if you back out after that point, is gone. Okay, the only way you may get that earnest money back is if Kevin isn't able to approve your mortgage. And outside of that, it's going to be very hard to get that earnest money back. Okay, so it's very important during that attorney review period that you say, I really want this house. Okay, because once you come out of it, you're locked in. And if you're willing and ready to throw away that earnest money, I don't know if y'all about y'all, but I ain't got it. So keep that in mind. So now that the attorney review period is closed out, you're locked in the loan. Now you're back to your loan officer. He is about to start your mortgage process now because now you've officially got a property in place. So now he can put numbers together. Now he knows how much property taxes are, insurance, all this stuff because now we have an actual property. So I'm going to let him take it from here.
Thank you, sir. Before I get started, were there any questions on what I had talked about earlier as far as just getting started, getting pre-approved?
Yes, I had a few questions, Kevin. For the pre-approval, how far in advance do you suggest that a person get that, before they're actually interested in the home search?
The moment that you think that you're ready, that's when you start. No more, no less. So it's like, because it's not, you could, as soon as you think that, like, whether or not if it's, you want to buy next summer, you want to buy next year, as soon as you had the thought that you want to buy, I would say start the pre-approval process then. Only because if, like, even if it is, say you plan on relocating, so it's going to be a year. The reason why you would want to start now versus like saying 2 months, 3 months before the move, because there might be some stuff that we need to work on that might take you a year. And you wait until then, and then now we can't do anything just yet.
That's several other questions.
Oh.
So how long is the pre-approval good?
90 days, typically 90 days.
And another question, what is the minimum credit score typically that a person should have to receive the best interest rate that's out on the market? Is there a range of a minimum in order to get the best interest rate?
Okay, so yes. To answer your question as far as that, the best to get the quote unquote best interest rate, and when it comes to interest rates vary. It's not like when we get a credit card and everybody gets the same credit card, everybody gets the same rate. So because you can, let's just say you got a 780, and you got a 780, you got a 780. Your rate, you might end up with a rate, let's just say 6.5. You may end up with 7. You may end up with 6, whatever. And now, why would it be different if we got the same rates? You may be in the back, ma'am. You may be able to, like, what they call buy down your rate, meaning like the interest rate may come at par, meaning like you're not paying no points or any discount points to get that rate. So that may be 7, okay? But you want a lower rate, so you have the money, or you might get some seller's credits, which seller's credits you can use to buy down the rate. So now that's how you may have came up with the 6.5 rate. Okay, so rates come in a range, and so when we say the best rate is going to be for that individual person. But I understand your question, but to really answer it, it's not really
I understand your
okay.
answer.
Okay.
Finally, how do you determine the amount of emergency fund? What do you look at when you're trying to pre-approve? As you make the statement, maybe a person thinks about doing a conventional loan,
Mhm.
but then you may not recommend because uh, you that may not leave them much of an emergency fund. So, what is an average amount? Are we emergency fund based upon what you anticipate your expenses when you're in a house for, 2, 3 months,
Mhm.
months? I mean, what is your your thing in regards?
I,
Emergency fund.
I understand. Well, to answer that question, as far as it's not just conventional, it's FHA conventional or anything where it comes to where you should have an emergency fund. Now, is having an emergency fund a requirement to get a mortgage? It's not. It's just recommended, just like with the home inspection. That's not a requirement. It's just something. If I was like, if I'm, like my daughters, like when they getting ready to buy a house and everything like that, I'm just trying to like, hey, all the stuff that can go wrong and this, that, or whatever, this, you looking on Facebook, you see everybody getting the keys and stuff like that, which is a good dream and stuff like that. But life happens after. It don't stop just because, that. And so, but financially, most financial advisors say that you want to have at least 3 months of your gross income. Okay, so I would say now when it comes to a mortgage, there are times that where we call that like reserves, meaning that you might be buying a 3 or 4 unit, or your credit might not be as such to where the lender is asking for you to have like 2 months reserves. So when I say reserves, what that is, to keep it simple, let's just say your mortgage payment is $2,000, okay? And if they want 3 months, that means they want $6,000 that's just sitting there. Not that you have to take anything out. You just have to show that you got like reserves, which could be like a 401k statement, a retirement account, could just be in checking savings, could be a whole life policy. So those are things like that. But emergency fund is not required. It's just strongly, for me, strongly recommended. And I think you, okay. All right. Locking in a rate. What does that mean? So when I pre-approved you, we went over rates, and I'm pretty sure I'm gonna tell you like don't get tunnel vision on this rate that I'm qualifying you on today, because the rate is gonna fluctuate every every day. I mean, how many times you said you was gonna get some gas before you went home, and then you mess around, you went home and you left to go out to get the gas the next day, and now it went up. It's the same thing with mortgage rates. So that's why I say don't get tunnel vision on the rate that we talk about today. It might take you a month, 2 months to find a house. So we're going back to the best rate. We're going to look at the best rate for you once you have an accepted offer and we're ready to lock it in. Now, when we say lock it in, that means the rate is not going to fluctuate. That rate is going to be fixed. And so it's typically like a 30-day, 45 rate lock. So like that gives us enough time to go through the mortgage process, underwrite the loan, have the appraisal and everything like that, and then you close. Now let's just say something happens to where it was a 30-day contract and the attorney review period went way too long, the appraisal was delayed, there was stuff happened. So what happens then, we do what's called like an extension. We extend the lock. Typically now, if this is something that's not on you, it's not, it's not the buyer's fault at all. That if it's a lender thing, we pay for that extension because there is a fee. But if it's a seller issue, that's where I'm talk to Marcus and be like, this is on the seller side. This is not us. It's not the borrower. And then we may try to pass that cost off to the seller. Should you wait to lock? You don't necessarily have to lock in right away. You can, what they do is called, what they say, float, meaning like, okay, so we got the contract today. I'll go over with you the best rates. So I might say, hey, the way the market is shifting right now, you expecting to close in 30 days. I'm pretty sure your rate is probably going to go down a little bit prior to you closing. So we can give it a couple of weeks and see how the rates are going to be. Then we can lock it in. Or you just say, Kevin, I'm good. Just lock it in. I don't want to. But keep in mind, if I lock it in at the 6.5 today, and then 5 days, I mean, like right before closing, we can do what's called like a renegotiation, but there's a fee. Okay. So, but if it goes down after that, we can't just change it. Discounts points is what I was just explaining as far as like when you want to buy down the rate. So if, like I said, the rates come in like a range. 6.5 might be at par, meaning like you're not paying anything. And as the rates go down, like to get better, you're paying to get that per se rate. Now on the flip side, let's just say you short funds to close a little bit, or you need a little bit of credits. You can take a higher rate and get what's called lender's credits. Okay, lender's credits mean basically just like you would be buying down a rate, the lender will be giving you X amount of money to get the higher rate. Okay, that was pretty much done back when during COVID, when a lot of loan mortgage companies was advertising refinancing, no closing costs, this, that, or whatever. The reason why they were saying no closing costs, it was closing costs because you got to pay for don't nobody work for free. And so, but they was giving you a rate that have enough credits that the credits covered everything. So that's why you was no cost. What's included in your monthly payment? So now this is very important because a lot of times about a year into the loan or something has changed and people are calling me screaming, yelling or whatever because they forgot that we had the conversation. They think their mortgage went up. Okay, your mortgage did not necessarily go up. So your principal and your interest, that's your mortgage payment. Unless you are getting an adjustable rate mortgage, which we rarely do right now, it's situational, but your rate is going to be fixed for the 30-year, 20-year, however long your term is. So your principal and interest is not going to change. The only way that your mortgage payment can change is if your property taxes go up, your homeowner insurance goes up, mortgage insurance, what we talked about, but that will not change. That will eventually fall off, depending upon what type of loan you have. But if your taxes and your insurance go up, there's nothing we can do about that. You get what's called like an escrow analysis once a year, where the escrow analysis comes out. So if your taxes have went up or your insurance has went up, you get kind of like a heads up about what's going on.
For the mortgage, the last one mortgage insurance, put down to 20%, that will that not?
Yes, that would negate the mortgage insurance on a conventional loan. On an FHA loan, you can still put down 20%, but you're going to have mortgage insurance for like the first 10 years, and then it'll fall off. Can I use gift money? Yes, you can. So if you got parents, loved ones that want to give you some money, you can use that. Or if you get married, you can use the gift, the money from the wedding, you can use that. Loan to value. Basically loan to value. So if you say you're putting down 5% of the loan, your loan to value would be 95%. So it depends upon the loan amount and the value of the property. Any questions on mortgage insurance? Closing costs. So now this is a thing that where a lot of people not really thinking about when they think about like how much money that they have to put down. They're just thinking about like, I got $10,000, that's what I got. And so whenever they say that to me, I have to ask, is this 10,000 that you want to put down, or this 10,000 that you have total? Because if all you have is $10,000, now I have to split that 10,000 up to cover down payment and closing costs. So closing costs covers the appraisal, title fees, the lender fees, underwriting fees, prepaid taxes, your insurance. So that's what closing costs is involved in. So that can range depending upon the purchase price. It's typically around 2 to 4% of whatever the purchase price is as a rule of thumb. It can vary. escrow account. So your escrow account, back to that first slide where how the mortgage payment was broken down, and it had principal, it had taxes, insurance, and mortgage insurance. That's at your escrow. Okay, so it's basically like a little kitty, that's been set aside to be able to pay your taxes twice a year on your behalf. You'll always still get a bill, but your lender will be paying your taxes for you. Homeowners insurance will be paid once a year for you. You do not have to have an escrow if you put 20% down, but it's just recommended so that this eliminates a headache for you as far as like when it comes to paying those bills. What happens when you apply for a loan? So basically when it says this part, so now like you said, we got the purchase contract, we got everything. So most lenders require what's called like an application deposit at that point. Up until then, no money has changed hands. So now you've given the earnest money, which goes towards your down payment and closing costs. So now there's an application deposit that goes towards your down payment and closing costs as well. So then we're going to order the appraisal. Well, once the inspection comes back and I know everybody, we're going to proceed. We order the appraisal. Title work is ordered. Title work is very highly needed to make sure that you have a clear title, to make sure that there's no liens on the property. There's no cousins that can come back and say, this is my property. I was supposed to get this when so-and-so died. They make sure, and then if anything was to happen after the fact, you have what's called title insurance. Like I said, that's what's going to cover you in case something like that was to happen, where somebody tried to come back and say that this property belonged to them. And then so once your loan is approved, that's when you get an email saying, like, we are clear to close. That's like clear to close. It's like just a blessing to most lenders and agents. We just love to hear that. Clear to close meaning like everything is good. Underwriting has signed off on your loan. They've signed off on your income. Any issues that have popped up, underwriting has signed off on it, and you are now good to go. What responsibilities do you have during the lending process? Please don't change jobs. Don't do nothing unless you call me, basically. Don't, it's like, it's things that we just kind of like take for granted, because on a typical day-to-day basis, it would not be a thing. But there are things that where you may not be thinking about it. And if I might tell you that it's no issue, but please just call your loan officer and just to say, hey, I ain't sure if this is a thing, and get the loan officer's blessing before you do it. Don't get no new debt. Don't go try to furnish the house before you do anything. None of that. Don't co-sign for your kids, no car. It's okay. So any questions on that? I know I was talking kind of fast, but we try to get a time.
You might have covered it earlier. We got earnest money. What percent? How does
So when you talk, so that's something that you would talk with Marcus about. It's typically 1% or whatever, but depending on how bad you want it, that's what Marcus
So,
educates you
in a
on.
nutshell, there's no set rule on earnest money. Okay, there's no set dollar amount. There's no special formula. There's no certain percentage or any of that stuff. Just have the mindset that when it comes to making your offer, earnest money is a part of your offer. And typically, the higher your earnest money, the stronger your offer. Because you got to look at it this way: earnest money is a good faith deposit. It's showing that seller how bad you want this house. How serious am I about buying this house? So just keep that in mind when you're trying to figure out how much earnest money should I give. And of course, me as an agent will kind of help coach you through that. But again, just in a nutshell, the higher the earnest money, the stronger your offer, because it is part of the offer.
application fee? What is that?
Application fee,
It ranges from lender to lender, but it could be typically it's around $500 or $600.
Appraisal fee?
The appraisal fee is typically the same, and that's covered typically by the application deposit.
The title work?
That varies depending upon the title company, but that can be roughly around maybe between 1,800 to maybe 2,500.
So these are all the additional money. This,
So now that money will be included in your closing costs. So if at the end of the day, just real quick, so if I told you, okay, your down payment and closing costs, you're estimated $15,000. That includes your down payment and closing costs. Your earnest money, let's say you did 3,000, that made it $12,000 left. And then you gave me $500 for application deposit, so now we at 11,500. So title work, appraisal, everything, your insurance, your first year's insurance, everything like that, all the fees are included in that number. So it wouldn't be, you wouldn't have to worry about trying to like have enough to pay title or have enough to do this. It'll be included in the number that I would give you. And I would go over you get what's called like a loan estimate, that I would go over the itemization of those particular fees.
so, let's say, for example, if I was looking at a house for $300,000 and want to do a conventional, and it's 60,000. I want to do, I guess, the 20% down.
Mhm.
Now, that 20,000 that I put down to do a conventional loan is not including these other things are in addition that I would need.
Correct.
I would need the 1% round for the earnest money application, appraisal type. So this is in addition to.
Correct. So
Okay.
yeah, so down payment goes totally towards
Yes.
the purchase price, closing costs, totally separate.
Yeah, just kind of think of it like your down payment is your equity you're going into the house with, basically. And the closing cost is the cost to get that loan. So that's kind of, in a nutshell, that's how it is. One is the cost, and one is just money you're putting back into your house, which is your down payment.
And then you have the 3 to 4% commission that you pay the agent that's doing all the work.
Well, the 3 to 4% is not. I mean, I don't know where you got those percentages from, but yeah. So the 3 or 4% is, again, that's a case by case scenario. It may be a situation where you won't have anything to pay when it comes to that, because you have that particular house that seller is paying. So it's
Right.
not a set thing.
Right, but
In the event that you do have a house that you fall in love with and it just happen to be one that the seller ain't paying it,
Right.
then that's where you go back to that original buyer representation agreement and whatever agreement you had with that agent, as far as if that happens, what would you pay them? Okay. And I will say typically standard anywhere between 2 to 3% for that buyer agent's commission. The average is about 2.5, but again, it's whatever that agent and that buyer negotiate for the most part. There's no standard percentage for that. Anything else?
Question. So the pre-approval process, when you said don't make big purchases or
Mm-hmm.
anything like that. So I haven't done a pre-approval, but I'm looking to buy within cars. I need to buy. So
Well, I would
So
say if you're going to do that, and he can probably expand on it, but I would say if you're going to have those types of things, I'll probably do that before you apply, so that way he makes sure he includes that payment in your numbers to make sure you still qualify. It's more so in terms of after the fact, that when he was going over to don't do this, don't do that, because at that point your credit's already pulled. He's already run all the numbers based on your income. He already knows how much debt you got, so you can't go out and add more debt. And now he got to go back to the drawing board and include that. And then a lot of times, unfortunately, that new debt could possibly disqualify you now. You know what I mean? So those are the do's and don'ts that he's referring to. But if you do all that stuff before he even applies and before he even pulls your credit and all that, you got to do what you got to do. If you need a car, you got to get a car, right?
you got to work.
So just make sure you do those things beforehand. So just to make sure that those numbers are included in your pre-approval.
it's a hard hit.
No, by default. So now everybody's different when it comes to their process, when it comes to lending and doing a pre-approval. So initially, I do a soft pull on all three credit bureaus initially. The only time I'm gonna do a hard pull is when we actually ready to rock and roll. That's when we'll do the hard, and then typically it's going to be the same information, but it's just going to be an actual hit.
Anything else?
Hear a lot of times they say real estate lawyer.
Real estate lawyer.
When does that
The real estate attorney.
come? Yes.
Yes, so that person comes into play right when your offer is accepted and you're going through that inspection period, attorney review period. I'm a one-stop shop. So once you go with me, you don't need anything else. I got everything you need. So attorneys, inspectors, contractors, loan officers, anything you may need in your process, during the process, after the process, movers. I got my guy here who's got his own moving company. Anything you may need, I got for you. But some agents may not have all those resources, but typically you want to build a good team that's working for you. And that's basically what it is. Your agent, your loan officer, your attorney, your inspector, all these people is your team. So it's very important that this team functions
As one.
as one. Communication is there. That's why it's important for me that I always suggest my clients go through people that I recommend because I already have the communication with them. I can call Kevin on a Sunday night and say, "Hey man, I need to update this pre-approval," and he'll honor that. If you go somewhere else who I have no relationship with or any of that, it may present some challenges. You get what I'm saying? Same thing with attorneys. There are going to be times where we need a quick response. My attorneys, I can call him right away and he'll pick up the phone for me. But if it's an attorney I've never worked with, again, it presents some challenges. Okay, so real estate attorney comes into play very beginning when it's time to look over that contract and all the legal terminologies that's involved in
How does all this play in where, like, I'm renting right
that. Okay.
now, and so I'm obviously in a lease, and if I were to find a house before my lease expires, honestly, I didn't pay attention to my lease to say, okay.
Do you have a copy of your lease?
I do have a copy.
Okay. Look at your lease. I'm sure there's a section in your lease that covers that. And typically, purchasing a home is one of the ways out of a lease, if as long as you give them the proper notice, 30 days or so. Purchasing a home is usually a good reason where landlords would allow you to break it. But I would definitely refer to your lease before you do that. Anything else?
Been searching for a house, in regards to wanting to, certain location. Can you filter it out for just certain location? Don't want to pay property taxes, above a certain amount. And, don't want to pay, HOA fees. And in doing that, I know it limits the,
Your options.
of what you looking for. It's less home to look at. But can you filter, and what is your professional opinion? And also schools, because sometimes you're moving to a neighborhood that's considered a great neighborhood, but the school rating is poor. So do you have clients that do we put those stipulations in there?
All the time. All the time. And everyone has preferences. Everyone, has certain things they look for in a house, look for in the area, schools, things of that nature. As an agent, unfortunately, I can't give you my recommendation as to my opinion on what's a good school district, what's a good area, this is that. All I can do is provide you with the tools to do that research yourself because every person is different. Someone may be comfortable in an area that has a certain school district and another person may think it's not up to their standards. So it's all subjective. It's all based on their personal preference. But to avoid any discriminatory practices, I can't steer you to a certain area or say one area is better than the next. All I can do is provide you with the resources to kind of do that research and make that determination, if that helps. Okay. Anybody else? Right, just a couple more slides and we'll get you guys out of here. I know we're a little bit over time. So you're done, you're ready to schedule your closing. Now it's the point where you do your final walkthrough. And that's your final walkthrough is just your time to go back to the house the day before closing or the morning of your closing to make sure that everything you asked for in that home inspection, that seller to fix, make sure they did it. Make sure the house is still in the same condition. Make sure nobody's come in and took all the appliances out. Make sure everything is where it was when you first fell in love with the place. So that's the whole point of the final walkthrough. If Kevin, if you don't mind, I can kind of go through
Yeah,
this
that's fine.
with you. So yeah, examine every corner of the house, check the floor, check from floor to ceiling. Be sure the seller fixed any problems they promised to fix. Make sure everything is just as you expected before you close. And remember, after you sign those papers, that house is yours. So, in saying that, what do you expect on closing day? So you wire the money required for your down payment and closing costs. Before wiring money, it's important to call escrow to verify wire information. Due to there's a lot of wire fraud out there, so make sure you do that. You are going to sign a lot of papers, usually a day or two beforehand, so that way closing day you won't have to sign as many. But then closing day, you sign the rest of your papers and get the keys. So that's pretty much it. So any other questions? Yes. It depends on the issue. First, I would say that. And then secondly, I would say, um, really, you can't because that's the point of you going through all your due diligence during the inspection period. And if it comes to where something was missed, is that really on the seller or is that on your inspector? You get what I'm saying? So it's very important that you do your due diligence beforehand. But it happens, and that's where you gotta have a good real estate attorney. So the first thing I would do in that scenario is call my attorney, let them know the answer situation, and then that attorney will more than likely reach out to that seller's attorney and see how they can kind of get that resolved. Yes.
So going off the question, so say you're moving in and you see in their process of moving out the house, they like left it.
So again, during the final walkthrough, they should have already been moved out, and you should have picked up on that at that time. And I would say if it's very important to you, and if it's something that's going to make or break you walking away, don't go to the closing. Just call your attorney and say, "Hey, I saw something last night on walkthrough. I don't want to close until we address it." The closing will have to get postponed, and then we back to the negotiating table, and the attorneys are fighting that out.
And that's not earnest money that you lost. If it's something that happened after they've moved out, but you noticed it.
Well, I can't answer that because that's more of an attorney question. But I would say, depending on the scenario, there could be a situation where you can get it back. It just really depends again on what the issue is. So, but your attorney, that's why they get paid to handle those type of scenarios. Yes.
What percent of houses, the seller does the home warranty package?
Mm-hmm.
So
Mhm.
that if there's any breakdown in
Mm-hmm.
appliances, you got that home warranty.
Mm-hmm.
I mean, years ago when I bought a house, that's what was part of the package.
Mm-hmm.
Do they do that now?
Sometimes, but sometimes you can ask for it. As the buyer, you can say, a part of your offer, I want a warranty. If you notice yourself when you looked at the house before you made the offer, you notice, the water heater may be a little old, or you might have some appliances maybe a little dated, and you want a peace of mind. Yeah, ask for a warranty and say, I want to make sure this stuff is. But keep in mind, the warranty is only going to cover for the first year, and then after that, you're going to have to continue to pay it. Yeah, it happens. It happens. Sometimes sellers will offer it, but then it's perfectly fine for you as a buyer to ask for it. So, anything else?
It's on the tip of your tongue. Well, okay, FHA is a government loan in itself. So as far as and then conventional is like the two major investors for that is Fannie Mae and Freddie Mac. So they just have when it comes to from an underwriting perspective, the guidelines are somewhat similar. But when it comes to like most people look at FHA because the 3.5% down payment. Now on the flip side, on the conventional, and say you're a first-time home buyer and you fit certain income parameters, you can still put down 3%. They have what's called like a Fannie Mae has what's called like a home ready product, and Freddie Mac has a home possible. So you will be putting down 3%. So now, how would there was a slide in this that said how would I figure out like which one? A lot of times it's going to be the mortgage insurance because on FHA the mortgage insurance is a set premium of whatever the loan amount, the purchase price is. That's how your mortgage insurance amount is set. On a conventional loan, that premium can vary. That's where the credit comes into play. So if you got good credit, the mortgage insurance might be pretty decent. If the credit is still qualifying to get the mortgage, but still not that good per se, your mortgage insurance might be kind of high. So if it's a debt to income ratio issue, and I'm sorry, I didn't talk about debt to income ratio, but if your debt to income ratio is too high with conventional, because it's simply because the mortgage insurance is too high, that's where I might say, okay, let's look at FHA, and the mortgage insurance might bring us back down within tolerance and guidelines.
I know there was a lot of mortgage lingo. Don't let it scare you. FHA is a good product. FHA unfortunately has a negative stigma attached to it with a lot of people, but FHA is a good product because it helps buyers get into homes. Okay, as a buyer, if I'm an FHA buyer, I just want to make sure that I'm looking at properties that would require minimal work because those FHA appraisals is going to look at more detailed things than a conventional appraiser would, and that may present some issues down the line.
And even I'm sorry, but even on that, keep in mind, FHA and VA, what they're looking for are strictly health and safety concerns.
So stuff like peeling paint is a big thing.
So that's it.
FHA. If there's paint peeling around the windows, around the doors, they're going to definitely flag it for that. You know what I mean? And again, as the buyer, that's not really your issue. That's more of a seller issue. But if you see a lot of times you hear sellers say, I don't want to deal with FHA, those are some of the reasons why, because they already know they ain't trying to fix nothing. So that's why they don't want to deal with FHA. Another negative thing from a seller's perspective is that if that FHA appraisal comes in low, FHA appraisals stick with the property, not the person. So even if that deal falls apart, that appraised value is still stuck on that house. So if that seller gets a new buyer and that new buyer is FHA, he still can't sell it for more than what that appraisal was. And it's for what, 6 months?
Correct.
FHA value stayed with the house for 6 months. So that's another reason that sellers don't like to deal with it, because they know that, hey, they found some issues. If it come in low, I'm gonna be stuck with this value, for the next 6 months. So keep that in mind as well. But as a buyer, it's not no benefit. I mean, that's not hurting you. That's actually helping you. So, anything else? Why don't we talk a little bit offline? How about that? All right. But thank you again. This is our contact information.